Okay, welcome everybody. We'll wait a minute or two until we get everybody rolled in. I see a lot of participants starting to join. Very exciting. How are you today, TJ?
I'm doing well, Pearl. How are you?
I'm doing good. I'm excited to have you on. My first guest that First Choice Shipping is actually hosting.
I'm honored.
Yeah, you should be honored. We choose wisely. What can I tell you? I'm excited. I'm excited about this topic. I think there's like a lot of questions that people have, and we have a pretty good audience that signed up today. So we'll give it another minute and then we'll get started.
Yeah, and I think maybe while we're waiting, if anyone that's here wants to put in the chat where they're joining from, I'm sure we have people from all over the place. So it's just good to know.
Yeah, that'd be great. Where are you out from today, TJ?
Today, I'm in Austin, Texas.
Okay, that's pretty good.
But in the office, you can see the logo on the wall here, I think.
Yes, I like that. Nice logo. Okay, let's see. We have Lori is from Michigan. Hey, Lori. Raheem is from London. Nice. Love it. I love when we have people from over the ocean. Sarah from Madison. Wow, we have someone from Germany. Naomi from Germany. Thanks for joining. I hope we got your name right. Brooklyn.
In the house.
Brooklyn in the house. That's right. Sarah from Madison. Beautiful. All right, keep it coming, guys. All right, TJ, are you ready? Do you want to get started?
Cool. Yeah, happy to get started. So what I'm going to do is share my screen. And the way that I kind of want to run this is to be very interactive, right? So I have a number of slides here in which we'll go through not only the top 5 secrets, which I'll surmise at the end, but sort of the Elevate way, sort of what differentiates us, why we are where we are, how we kind of got here, and then go from there. And what I'd also want to do is to encourage everyone to put questions in the Q&A throughout. If I see them, I'll try and answer them. Pearl, you can interrupt me if it fits in, or we can save them for the end. And then to answer the first question, yes, I will. I'll share the slides with Pearl post fact, and we can send them out.
Yeah,
so
we'll record this as well, and we'll send the recording out for whoever can't make it, or just wants to show it to their team or whoever. So we'll send out a recording as well.
Okay, perfect. So I do have a number of slides, so we're just going to jump right in here. Obviously, you guys know Pearl, the wonderful Pearl Ausch of First Choice Shipping. You might know me. I've been around this Amazon world for quite a while and wearing a couple different hats. I was previously at 2 companies in the cross-border payment space, World First, and then most recently at Payoneer. So if you were ever selling internationally and using First Choice, you likely came across me or some of my colleagues, or at least my companies throughout that time. I joined Elevate Brands in August of this year, so just about three full months ago, and it's been great. It's been nice to get a bit of a change of pace out of the payments world and into this other side, right? So I had been so long on the service side, and now from an Elevate perspective, I now work for a brand, or in this case, multiple brands. And what my role here at Partnerships, it's one of those that's a bit ambiguous, but what it is really connecting Elevate with the ecosystem, right? To help sellers and brands around the world learn about Elevate, what makes us different, how we function, how we can help, how we can buy your business, and everything from A to Z there. And then also, post fact in terms of like what other service providers can do to help us, because at the core, we are brands as well. So we need help with international shipping or translations or listings. And I'll touch on a couple of those and how we go.
Right. I want to add one thing. The reason, why we invited Elevate, right? There are so many aggregators and there's so many that would love to use our audience and talk to the people, right? And the reason why we chose to go with Elevate, obviously TJ and myself go way back and, there's a trust factor there, but there's something special about Elevate where they really get to know you and your business. And it's not just a business transaction. And that's what spoke to me. And that's the reason why I was interested in bringing you to speak to our audience, because I think that's really important, right? People create sort of their babies here with their businesses, and they do want to feel like it's taken care of, even post sale. And this whole way of the way Elevate's culture is and the way you guys operate is very similar to the way First Choice Shipping does. And I resonate with that very much. And I love what you guys are doing, and I'm excited for everybody else to get to know you guys a bit better.
Yeah, just 2 points on that. Is the first one is when I was even just interviewing with Elevate, I had a meeting with Ryan, who's their co-founder and CEO, and one word just kept coming up from him, and it's relationships, right? And he has built his business and his reputation built on good relationships and in terms of partnerships and being reciprocal and fair, and everybody can win. I know as cliche it is, win, 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 but everyone can win in many situations here. And then the other thing is that, to your point, Pearl, building a business from scratch is very personal, right? It's something that a lot of people put their time, money, heart, everything into, and selling that business or exiting or benefiting from that business should be personal as well. So to your point, like we're not here in the, obviously we're here to make money and grow our business, but we're not here to be rude about it or to take advantage of people. It's like things have to be a good fit for us and have to be a good fit for the brand owner. And we'll dive into certain situations there as well. But I think what sort of separates Elevate a little bit is that we were sellers before we were an aggregator. So in some of those pictures there, you can see Ryan, who's our CEO, and James, who's their COO. The two of them started as sellers on Amazon. They operated in the wholesale business. They were into every TJ Maxx and Marshall and outlet store buying Nike shoes, which are all the orange bags you see there. And they bought Adidas shoes and all these other, and they buy them for, $30, $40 and sell them for $100 and something, right? So this was started in 2016, and they operated like that until mid to end of 2019. So Ryan and James have been through it, so everyone from our leadership down knows how to sell on Amazon, knows the struggles that have gone through. They've been suspended 3 times. So, it's not too indifferent than a lot of the other brands on here, right? For whatever reason that Amazon deems, your account gets suspended. So it's always like fighting back through that. And, even today, we've acquired about 30 brands thus far, and we're closing about 1 a week. And, some of them have gotten suspended. So it's like, we are not viewed as this perfect child, and I'm not trying to paint that picture, but we've built a really good business with a lot of learnings along the way. And I think the key part here is obviously we raise a significant amount of capital to acquire those businesses, but more importantly, to operate those businesses. So, most of that or a chunk of that money goes to growing the businesses, which I'll get onto the next page. But our team right now is about 120 people globally. And the really interesting part is about 110 of them are on our operations side. So those are brand managers, logistics, PPC, operations, finance, basically every function that runs the business. There's only about 10 of us on the acquisition or the mergers and M&A team, right? So we know that we can buy every brand in the world, but if we don't know how to operate them, if we don't know how to grow those businesses, then we're not going to be around very long. So there was from the jump, like a very focused point to invest in and continue to invest in the operations teams.
Wow, impressive.
Yeah. So I just want to give you a quick snippet before we dive into some of the other stuff and in terms of the tips and stuff, is kind of how we view a brand when we acquire them. And these are also some things that we consider when we are evaluating brand to see if it's one that we would look to acquire, right? So when we look at a brand, we're looking for opportunities, right? So if we see a brand and they don't have any A+ content, or we see a brand and their advertising cost is really high, or we see a brand and their packaging and their branding is not that good, like, or those are all really good opportunities to us. So, what we'll go through is for each brand that we acquire is, look at conversions, look at where do they sit in terms of their competition in the review mode. So the review mode is basically, I have my product and I have 10,000 reviews, and you have a competing product and you have 2,000 reviews. Me as a buyer, an Amazon customer, I always look at the reviews. I don't read the reviews, but if there's something has way more reviews than that one, I'm more inclined to go with the one with significantly more reviews, which just means more people have bought it. It may not be it may be $1 more or $2 more or slightly less on the page, but that's really important to us. And then also increasing PPC traffic, growing the brands, right? So not only is it acquiring the brand, and we probably could operate at status quo, but growing the brand is important to us. When you think about where we get the funds to buy these brands, it's private equity, right? And it's venture capitalists, and they want to see significant return on their money. And how do they see that? Because they see that through our brands and our whole entire portfolio growing month over month, year over year. And then I think one of the things that Elevate does that not many other people do is launch new SKUs on the existing brand. So if we had a pet product brand and they sold pet toys, then it's like, okay, well, maybe we'll get into pet supplements, or maybe we get into leashes, or maybe we get into dog bowls, or whatever it is, like adding complementary products to continue to grow the brand and not just be reliant on the SKUs that we have. And then last part here is, and it's a WIP, which is a work in progress, but what we're in the process of doing is expanding our reach and trying to take these brands from typically US based businesses or brands on Amazon US to global brands, whether that's Canada, UK, Walmart, the EU, or eBay, or whatever it is. All of those, and even D2C, like a Shopify store, all of those are different levers that we can pull to continue to grow the brand.
Beautiful. That's really great. The international aspect, I completely agree. We've seen these companies where they went international and their sales increased in the country they were existing already. So that definitely adds a lot of value. Do you want to do a poll on before we continue?
Sure. I think we have a number of them. Pearl, did you want to launch one of them?
Yeah, let's see.
So
people love polls.
Yeah, let's do this one first. Are you a private label seller or are you a reseller? And I'll hold the reviews out the side. So if everyone could just click through that, what it does is just allow me to better understand, who we're talking to, right? Have a good idea of, what's going in. And it seems like the overwhelming majority here is a private label seller.
Cool.
Looks like they're still coming in, but over 85% or 87% now are private label sellers, with just a few being resellers. We can just quickly share the results. And you see them?
Yeah, very cool.
Cool. So back here, just the last point on our growth plan is like I said, I need to get some more updated data, but we're trending really. Oh, is it still sharing? Sorry. We're trending really well in terms of actually growing the businesses that we acquire. And like I said, when we'll talk about it in a little bit, but there's different options for a brand when their brand is being acquired, and different structures of payouts. And some of them have earnouts, and what those earnouts are dependent on how the brand performs post-acquisition. And we have a pretty good post-acquisition performance, and we're looking to also grow that, right, as we continue to go, each brand month over month. All right, cool. So now diving into sort of this is sort of where we get into the tip side of things. Just very early on, things that we tell brands, whether you're looking to sell today, sell in 6 months, 12 months, 18 months, not at all. These are all things that you can do to help put your brand in a better position. So we call it get your goat on. So growth, operations, accounting, and trenches. So just to quickly go through them, so we're not here for all day, but growing your brand and growing your narrative, right? So what are you building? That's new SKUs, new markets, and off Amazon, right? So what can you do to better position your brand, to make it the most attractive, to make it the best or most appealing for somebody to want to buy? You don't have to pull all these levers either. So like, for example, I know of a brand that was US based and doing very well. And then what they did was they just got VAT registered and got everything set up to start selling in the EU, but never actually sold. So what that was it was an opportunity for the buyer to look at it and say, oh, you already did all the legwork. All I have to do now is ship product there. And then, boom, we can pull that lever and start selling there, right? So it's not that you need to continue to launch 100 SKUs. If you have a hero SKU and you have maybe one or two others, maybe you can find some complementary products. And I talked on that a little bit. From the operation side, it goes back to the old adage of you should be working on your business, not in your business, right? You should be able to get up and leave and go on vacation for a week and your business will still run, whether that's via systems, whether that's via your team or whatever it is. When you go to sell your business, it's very likely that you don't want to continue to work on it, right? That's why you're exiting. You want the payday and you want to go maybe sit on the beach for a couple months or go on vacation with your family or whatever it may be. So you should have SOPs in place, those standard operating procedures, from day one. How do you do this? How do you do that? Because also, as you continue to grow, your teams are going to continue to grow, or you're going to have turnover, and you shouldn't be there teaching everyone how to do everything every time. And also, when you transition the business, if you can hand us a playbook and say, these are our SOPs for this brand, wow, that makes things a lot easier. And usually it answers every single question, right? We don't have to go back and wonder, well, what do you do on PPC, or what are your keywords, or what are this, or so things like that are really important. But probably the most important one that I see and the biggest mistake or error, I guess, that I see is on the accounting front. A lot of brands come to us without good books. If you are thinking your brand is worth multi-million dollars, like, it is absolutely worth it to invest in a good accountant and pay them a couple $100 a month to make sure you have everything in line. Pearl, you'd be surprised how many businesses come to us and don't have it. And we say, well, can you give us our financials? And one guy just printed out reports from Amazon and was like, here you go. And I'm like, I'm not sure that's exactly it, right? That doesn't take into account all your other financials, your warehousing, your PPC, your off Amazon, anything like that, your cost of goods sold, your import, logistics, taxes, right? So, whether you are selling today, whether you're selling in 12 months, 18 months, or not at all, like, this is something that every business should have. And I think it goes back to, a bit of the story of selling on Amazon started as a side business for a lot of people, or it started as something really small and it's grown, and you haven't taken the time to put in those processes to operate as a big business, as a multi-million-dollar business. You're still running as if you're a $100,000 business. And all those things need to be in place if you want to exit your business, right? It's really interesting. And the story comes through, and there's one instance where a seller had sent us their financials, and our M&A team does like a deep dive. And basically what they do is they deconstruct it and try and reconstruct the financials.
I just interrupt you.
Sure.
What does M&A stand for? I know what it stands for, but I know I had to ask you the first time for the people listening, if you could explain what that team does.
Sure. So the term M&A stands for mergers and acquisitions. And those are the analysts on our team and in Elevate and in every aggregator or every business really that are evaluating the businesses that we are looking to acquire. So they are typically some of the smartest people in the room because they're going to do exactly what I'm saying. They're going to take your financials, break them down, and try and rebuild them into fitting into the our evaluation standpoint. What they're also going to do is go through your products and your PPC and your supplier and your logistics and this, that, and the other, and sort of rebuild the picture of, is this business what they say it is? And then also, is this business one that's valuable for us and something that we should look to acquire and move on? So just to wrap that point, our M&A analysts were looking at this business, and there was a couple of questions about the financials. And it's, we go back to the seller and we say, well, can you explain A, B, C, D? The seller says, okay, give me a couple of days and I'll get back to you. A couple of days go by, the seller comes back with completely different financials, where the business is valued at different amounts, everything is different. And to us, that's a big red flag, right? How do we know which numbers are true? Also, why are you giving us these numbers this week and last week you gave us those numbers? So the story, or the moral of the story there, is from a trust perspective, you only have one chance with an aggregator or with any buyer really to make a good first impression, right? You can have your financials and you can look really good, but if they come back and they say, I don't really like this, I don't like that, and you change things up, or you're unable to explain trends in your business, that's a bit of a red flag, right? So I think, wrapping on that, just the accounting point, and I think we'll touch on it towards the end, but there's different types of accounting. There's cash accounting and accrual accounting. And a lot of businesses will just use cash accounting because it's easier. But in reality, if you're using a professional accountant, you should absolutely make sure that you're built on, or your books are built on accrual accounting. Because what that does is it takes into account a lot less fees that you would actually have on your balance sheet in terms of a cash account. So one, wherever you may be, speak to an accountant, professional in that situation. And then two, look into accrual accounting. There's the opportunity, if you're doing cash accounting versus accrual accounting, that you're going to be exiting your business, you would be leaving a significant amount of money on the table, just because of the way the numbers are calculated. And then the last one here is the trenches. So I talked about it a little bit before in terms of reviews, but what it also means is sort of separating you from the competition. And all of these things help you in terms of your valuation. So when we talk about patents, it's a defensible mechanism, right? Where we acquire your business and it has a patent and somebody tries to replicate it, we can fight it with that patent, right? That is the number one thing that probably helps increase your value of your business, right? And not every brand has the ability to have a patent. I get that. But trademarks are a really good second note, right? But you're only selling in the US. So a lot of people will only have a trademark in the US or in their home country or home region. One of the things that we've seen lately is businesses looking to also register their trademark in China, so that the trademark on the property can also be applied in China. So your manufacturer or another manufacturer can't just easily copy exactly what you're doing. If it's a non-patentable item, and then even so, if it's patentable, it's a very long process to get that. So, all those things coupled with brand registry are things that you can do today to put your business in a better position. Any questions? I think I saw one or two come in. So are you considering sellers? Artem asked if we were considering sellers that have licensing. So I think that would mean like if you have a licensing deal with a name brand, is that correct? Okay. Yeah, so we are considering that. Sometimes with the licensing deal, when you do switch ownership, they may not want to continue on with the deal. So obviously that will have to be talked through and figured out. But definitely, having the conversation. We have worked through licensing deals as well. So we have a plant product. It's like a pet plant product, and we actually just signed a licensing deal with Hello Kitty. So coupling those together, licensing is a really interesting opportunity when the numbers work out to put your brand in a better position. And then just before I move forward, there's a couple coming in, but there was a question about if this is suitable for the UK and EU brands. Yes, absolutely. I think a couple of brands that we've acquired were actually out of the UK. I think we've acquired 2 out of Australia, a couple out of Canada. So we are pretty global in terms of who we're working with. There are a couple other questions, but I want to continue. And
yeah, we can always get into the Q&A at the end. We'll definitely open it up to everybody then.
Yeah. So another couple things to consider when you are, even before you're considering a sell, but is this the right time for you to sell? From my perspective, we've never seen multiples higher, and we'll touch on in a minute what multiples mean. But essentially, it's how much you can make based off the revenue that you're currently generating, or how much more you can make. So if we look at these are sort of 5 questions that you should ask yourself. So how has your business been performing over the last 12 months? Now, a lot of businesses might be down in the last 3 months or so for a number of reasons, especially compared year over year. One, because last year everyone had a COVID bump, right? Everyone in the world had to buy online. So, there might be a normalcy return where people will go and buy certain things back in the store, and you're not seeing that same number of sales. Second, Pearl, as you know, right, from the logistics standpoint,
Yes.
logistics, import costs, import fees, tariffs, like all these things are compressing margins. Now, that's not to say that business still doesn't have value, because I spoke to a seller the other day, and he said, well, I'm going to wait until my margins get back up there, till logistics costs and import costs go back down. But in reality, there's no promise of that. I hope it is, and it has trended backwards from the container costs. But also, what you guys have to remember is we are sellers as well. Like, if you're seeing price compression on your brand, and your friends are seeing it, and their friends are seeing it, we are seeing it too. Like, we are a brand, we are an operator. So, if you think that the margin compression is only something you're going through, you're not alone. So what it is to how has your business been performing? And it goes back to the question of, when you want to sell, when you want to talk to someone, can you explain every sort of up and down in your business for the last 12 months or 24 months? The other thing here, or number 2, is, are your niches becoming more competitive? In our perspective, when we go to buy a brand, the more weird probably of the niche it is, the more interesting it is to us, right? The less competitors there are generally to begin with, and the more opportunity there is for us to build that into a bigger brand. But from a seller perspective, you're the operator of this brand. Is your niche becoming way too competitive? Is your daily grind becoming harder and harder? And it circles back to, did you start 3 years ago as a side business, and now it's still a side business, and you can't do that and your real job? Because in reality, selling on Amazon is a full-time business. This is not 2014, 15, 16 anymore, right? So we understand that, and what we also have to recognize is 3 years ago, 4 years ago, there wasn't ever an opportunity for a brand owner to capitalize on what they've built, right?
Yeah.
You could try and sell to some sort of private equity or whatever, but you're not going to, you wouldn't have gotten that any looks unless you were a multi tens of twenties of hundreds of $1 million brand, right? Now there's a buyer for everyone generally. So, you have the ability, if this is becoming too much for you, to exit, right? And to capitalize on that. And then the last two on the bottom there is, asking yourself, what does the growth profile look like? What can you continue to do to grow the brand? Do you have enough resources? Are you lacking capital? Are you lacking expertise? That's kind of where we come in, and it leverages back to our team that has 110, 120 people now that are doing and focusing on growing these brands. Whereas, we have a PPC person and a brand manager and a logistics person where that's their expertise, right? So is it something that you want to continue to do? And then lastly is the Amazon risk. And we probably see it all every day in terms of, the threat, the possibility of waking up and your listing is down. Whether that is from Amazon or Black Hat, which we'll get onto in a minute. There's a lot of risk of selling on Amazon. We love it because of the traffic and the opportunity it provides, but there is a lot of risk in that. So do you have the means to take your business multi-channel, to de-riskify that solution? Yeah. Okay, so now we're diving into a bit of the process of selling your business. So ultimately,
Do you call before that, TJ? Do you want? Let's see. Let's see
Sure.
how many interested parties there are. Actually, that would be interesting to see.
Are you interested in an exit?
Yeah, let's see that.
All right, so it's a simple yes or no. All right, so while we do that, I'll just quickly check the chat here.
And guys, again, we want to keep this as interactive as possible. If it's related to the slide that TJ's on, please go ahead and put into the Q&A box. And either he'll answer it now, or we'll definitely get to all your questions at the end.
Yeah, so just while we're here, before I dive into the slide, someone asked if we talk on the size of the business that we're looking for and the multiples, and I will in a couple of other slides. Someone asked, Artem asked, if retail presence adds to the valuation. Typically, yes, right? But what we're typically looking for is a business that's majority on Amazon, and that's just from a strictly operational perspective. Operating at scale, we would want to look for a business that can easily fit into our current processes. And then Luis asked, would you buy a company that does not have any product IP, but has strong sales, strong market presence, and profitability? And the short answer to that is absolutely yes. It's preferable if you have IP, it's preferable if you have patents and all that. But in reality, a lot of the businesses that we buy do not have that. And they are built exactly like you said, strong positioning, profitable, even growing significantly. So the question that we polled was, are you interested in an exit? And it looks like just about 70% said yes, with a little over 30% saying no. So pretty interesting stuff there.
I'm curious if anybody's interested in sharing in the chat box why the answer is yes and why the answer is no. I'm curious to hear what people have to say.
Yeah. Okay, cool. So what I wanted to talk about here is what your options are as a brand looking to exit. So, the direct sale is what we call like going directly to an aggregator or private equity or strategic partnership, something like that. And that's what we work with, or that's what we typically work with. That being said, a lot of the deals that we see come across our desk come from brokers. So there are typically a lot of value that a broker can add. And why I say that is there's very good brokers and there's some not so good brokers. But what you need to do is understand if the commission that you're paying this broker is going to, if they're going to do enough work for you to earn the commission that you're going to pay them, right? So you're building this business, you built it to a multi-million-dollar business, and typically what brokers are taking is 10%, right? So you're going to give up 1/10 of your payday for somebody that, maybe only helped you out for, 1 or 2 phone calls or made an introduction. Like, brokers were necessary before the world of aggregators, right?
Yeah.
You as a brand didn't know who to call in the private equity world or the non-traditional financing world. But now anyone in this chat can pick up the phone or send an email to an aggregator, say, this is my brand, these are my numbers, let's talk. I would go back and forth. Every brand is different, right? Every brand and brand owner is going to want one way or the other. What we do see is a lot of times businesses that have never been in a financial transaction like this, who maybe need help positioning and packaging their business, will go use a broker, and they will absolutely get the value out of that, right? Because that broker knows what Elevate's looking for, and the broker knows what this aggregator and that aggregator are looking for, and they can position you and make the introductions to the right people packaged correctly. And I think it comes back to like the finances is a really easy example, right? It's like, if you look at, if you're unsure of how your numbers look, or you're, not doing everything, by the books in terms of your accounting, a broker would be able to help you clean that up, put you in the right position, and send you off to the right aggregator in this instance. It is a lot of conversations because you're essentially being vetted by the broker, and then they're making you move on and be vetted by the aggregators. But a lot of times they are helpful hands. They are holding your hand through the process, and they're a sounding board. And for us, they're valuable as well, right? Because sometimes sellers aren't comfortable speaking directly with the buyer, right? So they'll have a conversation with the broker and with the buyer and with the seller, and then they'll also have a side conversation post-fact with the broker and say, well, they said that we could get 4x multiple, but I really wanted 4.5x, but I didn't want to say it on the call, right? So then the broker can be the sort of middleman and relay the information back and forth. Again, this comes down to there's good brokers and some not so good brokers. So what it is it's a relationship. As you should do your due diligence on anybody buying your business and the aggregator or whoever it is, you want to feel comfortable with them. You want to feel comfortable with the broker. So, whereas the aggregator buying your business might be like a marriage, the broker is dating, right? You're only going to be together for a little bit, but you want to give it your best shot, right? So interesting in that sense.
Yeah, so Jan is commenting that, is there any way you could actually share some actual case examples and names? I'm not sure if that's something you could share, maybe not names, but
names of brokers.
I guess that's what he's referring to, or right? Jan, could you expand on that? Okay, he's referring to brands. All right, we're gonna get on with it, Jan. We'll absolutely get into that. He wants to know about some of the brands that you've developed.
Okay. Okay. Well, yeah, happy to talk separately on that. We're not revealing the names of all of the brands that we talk to, but I can speak to them if you'd like. Interesting. Okay, cool. So, this is more educational on the deal structure and what the opportunities are, right? So a lot of the businesses that come in and a lot of the aggregators will have one of the two on the left, right? So it's a cash deal or it's an earnout, which is a cash deal plus the earnout. So a cash deal, why you would do something like that, it's a clean break. You want to sell your business. You don't want to be involved anymore. And then you can go, do whatever you'd like with your money, right? You are selling 100% of your business and you're done. You're handing your brand over. A lot of times what happens is ultimately there's an earnout involved, right? So you would sell your business and you'd be paid a multiple upfront, and then over the next year or two, whatever it may be, you'd have an earnout. And what that does is allow you as a brand owner to share in the future upside of the business. That's really advantageous for businesses that think that they want to, or think that their brand is still growing, right? And you don't want to miss out on that future opportunity. So looking at, if you're growing today, but you do want to exit, you don't want to deal with it anymore, you can exit your business. But what that does is you have to make sure you're partnered with the right aggregator, in this case, that knows how to grow your business and knows how to operate your business so that you hit those objectives so that you can continue to get paid. I think that's a conversation that's very timely right now for a lot of brands in the space that have earnouts as part of their contracts. And perhaps they're not as comfortable with the growth trajectory that their brand is on today compared to how they thought it would be. So I think all of those instances, the brand owner can still be or still have ongoing involvement, right? So a couple of the brand owners that have earnouts with us, one of the key things that they do is they've agreed to continue to launch new products, right? So every structure of every brand that we acquire has a brand manager, and like I said, all the shared resources of PPC and logistics and etc. But you, as the original brand owner, know the category, know the competitors, know the niche better than anybody else. So if you want to continue to launch products as this one brand that we have did, we're open to that, right? And you're going to be benefiting from that on the earnout structure that you have. Now, if we jump to the two on the right, and these are more complicated in terms of what the structure is, because it's not 100% sale. And then, it's usually anywhere from majority to 50% sale. So if we talk about a partial sale, in that instance, the aggregators would likely only do a deal in which they acquire a majority. And in reality, a lot of the aggregators are not doing anything other than 100% sale, but Elevate is, right? Because when you look at it and the brand comes to us and they are interested in doing a partial sale or a joint venture, and that's what JV stands for, that's exciting to us, right? That means you still fully believe in the growth potential of your brand and what there is to come. So in both instances, it's a little bit more complicated because there are different resources that need to be shared, and roles and responsibilities need to be set out from the beginning. And then also what there needs to be is a plan for an exit, like to sell the remaining 20 to 40% or 50% down the line, right? So we're looking for businesses in this instance that we would jive with very well, right? So it's very much, like I said, that marriage situation where you would need to be aligned on future ideas for the brand in terms of growth and next steps and stuff like that. But what it also does is allows the business to have a flexibility in terms of a second exit down the line. Yeah, Pearl?
Yeah, I sorry, I was just making sure I was not on mute. I think this goes back. I love the fact that you guys have like the joint venture idea, and it goes back to the fact of where you guys want to make sure that the seller, it's not just a done deal and whatever happens. There is take into account all the work they've put in, and just making sure that, if there is a seller that has a hard time parting with something that they've built out, or they're very concerned about like, what is it I'm going to do now? A lot of these sellers are very young, they have many, many years ahead of themselves before retirement. And this is a very, very interesting solution. Like you said, most aggregators don't have that.
Yeah. And even the ones, what I always say is like, Amazon sellers know how to sell. If you're good at launching products on Amazon, we have had multiple brands that have exited that are in the process now of building their next brand to exit again. So wow. The mentality that they started with in say 2017, 2018, whenever they got started, is very different, and your business and you are in a very different position financially than you were back then. So you all the mistakes you made, all the capital that you didn't have. Now you can take your learnings, launch a business, know that you have to get it to X point, and then somebody would be interested in acquiring that.
Very cool.
And then this ties back to a question from earlier in terms of valuations and exit multiples. Right now, we are seeing multiples in the range of 3 to 6x, sometimes higher, usually not lower than that. I think the first brand that we acquired 2 or so years ago was just 2x, right? So, multiples have grown. I think that's something that is plateauing a little bit right now. But if you have a growing business and you're looking to exit, like there's no reason why you couldn't be 5, 6x all in. And just to answer the question, that is 3 to 6x off your EBITDA or off your SDE. So we typically go off SDE because it adds in a little bit more, but SDE would stand for seller's discretionary earnings. So essentially, how much do you say you earn your business? Like I said, in our due diligence process, we will make sure and verify all those numbers. But if you have salaries, for example, and warehouse costs, you would add those back in to your SDE number because that's not part of the sale, right? Like we have our own warehouse. We're not going to continue to pay you. There's 100% acquisition. So, in that instance, there's certain things that you can add back in. But for example, PPC costs, that would be considered as a cost within your SDE. So I think it's important to start on the right side here to look at the things that you could have or the things that you could be doing that will give you a higher multiple. And I've touched on a number of them. So it's, having that review mode or in any way creating trenches between you and your competition, being profitable. Businesses over 20%, it's good position. Over 25, better. We see businesses with 30% profit margin. Like that's really good for us because that gives us room to play around. Recurring revenue, and then also businesses that have been selling for a significant period. So I did see another comment say someone was just selling for 4 months. Typically, we're looking for businesses that are selling for at least a year. But if you're selling for even longer than that and continuing to grow, that's something that's pretty interesting there. In this instance, so the last question addresses the question just came in the chat, or the last point here is doing at least $500,000 EBITDA. As we continue to grow, the size of the deals in which we are acquiring is growing as well. So, the average EBITDA of the businesses that we're acquiring right now is probably closer to $1 million or $2 million, right? So we have the funding now to continue to buy bigger brands. But that doesn't say like if your brand is doing 600K that we're not interested in it. I would say that if your brand is doing under 500K right now, Elevate is not probably the best position for you. But what I would say is I'm happy to connect you with some of the other either aggregators or brokers in the space that can find the right spot for you. Because I think there is probably a buyer for every brand that's looking to sell. It's just a matter of who it is. Because in this space, I think last I saw there's about 70 or 80 aggregators. So people with money to buy. So
that's crazy stuff. TJ, could you expand on Black Hat evidence? What is it that you're referring to?
Yeah, so these on the left-hand side are things that will either help or things that will either hurt your valuation or sort of negate a deal all in, right? So Black Hat is basically any tactic that violates Amazon's terms of services. So it's review manipulation or attacking listings or your competitors. Typically, we see it Black Hat attacks out of China where they'll like hijack your listing or anything like that. But the biggest one that probably affects businesses in the US is review manipulation or basically anything that violates their terms of service. Because we have had an instance where we bought a brand, we do our due diligence and they said they did no Black Hat. And then a couple of months later, the listing got shut down for suspicious activity, which was tied back to some black hat activity that they were doing. Now, in our position, they technically violated the agreement that they signed with us, that they said they didn't do any activity that violated the terms of service. Ultimately, we were able to get the listing back up and it was fine, but an aggregator does have the right in that instance to go back at you for potentially the money that they paid you, right? Because you essentially voided the contract. And just running down this list a little bit. So if you have a business with a ton of SKUs, not that it's a write-off, but that's something that an aggregator might be a little bit cautious about, because
Bless
excuse
you.
me, cautious about because we have to operate this and operate it at scale. So where are we going to keep all those SKUs on top of all the other SKUs? So from the first slide that we have over 9,000 SKUs across our businesses today. So how do you continue to grow and optimize the amount of SKUs that you have? And then also, like, if your business is in a hyper competitive niche or category, or it's seasonal, or things are complicated, these are things that might turn off a buyer. Looks like Daniel just asked what number of SKUs is optimal. There's no rhyme or reason there. I think every business is different, but if you had a business with 10 to 50 SKUs and 1 or 2 hero SKUs, like, that's a good, simple enough business for us. But if you had a business with 1,000 SKUs and no real single or 2 hero SKUs, that's a lot harder for us to evaluate, right?
That makes sense.
Yeah. Cool. And then just lastly, or second to last point is kind of recapping a bit of what we've done and who we are, right? So, like I said, Elevate has been sellers on Amazon since 2017, and we understand kind of the ebbs and flows and the ups and downs of selling online. And I think it's really important when evaluating who you want to sell your brand to. You want to have someone that you feel comfortable with, and then also someone that you think and believe can grow your business and grow your brand. And we thus far have a pretty good track record in doing that. So we have grown all the brands that we've acquired on average of over 100% since acquiring them. And like I said, we're continuing to buy more businesses. We're closing 1 a week, but we're growing them, and I think that's the real key. And we have a ton of funding, and we're actually probably close to closing another round, and our initial investors are doubling down, right? So they continue to see positive notes out of Elevate that they think are positioning us to grow even more. And not only do we have a veteran team on the M&A side, but also the operations side. We're continuing to bring on people that have worked at Amazon and on Amazon brands. And then also we're bringing on people that have retail experience and Walmart experience and international experience. So when we do acquire a brand, we can make sure that we're doing everything that we can to take it to the next level. And then lastly, I just wanted to put 5 things, I like to give people something to walk away from webinars with, right? So we didn't touch on it yet, but 1 Seller Central account per brand. So we often see businesses come to us and they'll launch this product, and they'll have a towel business, and then they'll launch a glassware business, and they'll launch a keyboard business, right? And it's like none of those have anything to do with each other. And for us, it's really hard to evaluate. Maybe we really like the towel business, but the keyboard business and the other business we're not that interested in. We've acquired businesses and then tried to do listing transfers, and we're not going to do it again. So what I would recommend is, if you're in a position today where you have multiple brands on the same Seller Central account, you can move them to new stores. Amazon now, although years ago they didn't, now allows you to have multiple stores. even under the same LLC, as long as they're for different brands, right? So if these brands have different purposes, then you can have those different stores. So from our perspective, even if you are the seller and you only want to sell one of the 3 brands that you had on the same store, you would have to have them as separate stores. So proactively, whether you're starting out today, whether you're in the middle or looking to exit, have that conversation and say, how am I going to position myself best to do that? I've touched on financials a ton, but I think it's really important. It's the number one thing that allows us to understand what you have, what you've built, right? So if you can give us financials for the last 12 months, 24 months, we're able to see trends in the business, right? And I think what's also important is looking at, if possible, the pre-COVID world, the COVID world, and then 2021. A lot of the times when looking at financials now, and we're able to get the 2019 numbers, we'll compare 2019 to 2021, kind of not cutting out 2020, but we know it was a bit of an anomaly for everyone. So it's looking at year-over-year growth, because if you look at 2020 versus 2021, a lot of businesses are down year-over-year, and we understand that. Like, our brands are the same way, but they're growing significantly up from 2019. So it's just making sure you have an accountant in the right place, looking at your accounts effectively. Next is, it comes back to the question of, how are you going to position your business in the best way possible? Is that broker something that you want to do, something that you need? Could you do the due diligence, do the work to get your business in a position where an aggregator will understand it, appreciate it, and know it for what it is? Or will you use that broker, and then will they be able to earn that commission, whether it's 10% or something around there? And then one point I touched on in terms of financials, but it really goes across the entire business, is avoiding actions that erode trust. So I think I touched on it, but we were in due diligence with a brand, and there was just a bunch of questions, right? It was, how did they get to 10,000 SKUs so quickly? 10,000 reviews so quickly, and how did they do this and how did they do that? And the brand just said, they never did anything violating terms of service, this and the other. And they agreed to that. And then we went back and we pushed them on it. And they ended up acknowledging that they had used some black hat tactics, excuse me, for review manipulation. Knowing that, we couldn't go through with acquiring the business, because what else had they not been truthful about? And then also it runs the risk of Amazon coming back for that brand and saying, in 2020 you did XYZ, we're shutting you down. As much as these are multi-million-dollar payouts for you as brands, these are multi-million-dollar investments for us as well. So we have to make sure that we are doing our due diligence and buying brands that are best positioned to succeed. And then the last one here that we didn't get time to talk on today, but it's really understanding the tax ramifications of exiting your business, right? So looking into capital gains tax. It's very likely, so they say, that capital gains tax will change going into 2022. So I've spoken to a number of sellers who said, I just want to grow my business 5% more, or get 5% more on my revenue number, and then I'll be happy to sell. But if that capital gains tax number goes up 10%, all the efforts in which you've done for the last 6-12 months to go up 5% are negated anyway. So what you have to do is understand, and also, like, if you want to grow 5% more, there's no guarantee that you're going to get there, right? So if your business is growing, and we would say, like, if your goal is X, and X is a $10 million payout, how are you going to get there? You kind of have to work backwards from that, right? So if you say, perhaps my range of multiples is anywhere from 4.5 to 6x. Okay, what do I have to do? How do I have to get, what revenue number do I have to get to? Okay, that's about $1.5 to $2 million. Okay, how do I get to that number, right? And then you also, like I said, have to take into account these tax ramifications and what's the number you're actually going to walk away with. I know I've been talking a lot, and I feel like I gave a lot of information, and I'm happy as always to take some more questions here. Artem asked one question here just while I have it up. What is the capital gain tax rate right now? That's a good question, and I forget it off the top of my head, but it's definitely Googleable.
Yeah, that's a good question. TJ, I'm going to jump in. We had some questions that came in before the webinar as well. I'm just going to sift through and see what looks interesting. What categories are you guys buying in? I know some aggregators will stay away from certain categories. What would you say would be something that you guys would stay away from or be leaning towards?
Yeah, so from our perspective, we typically are category agnostic in the sense that we do not pick, we're pretty open into the categories that we do pick. We do somewhat stay away from human supplements as well as fashion. Those are probably the two categories we stay away from. The categories in which we have acquired businesses that are doing well, the outdoor space, the pet space, babies, games, teas, and stuff like that. So we have this a matcha tea brand that is doing really well, that we acquired earlier this year. So it's unique products, right? Like if we think about in the pet space, right? That's a hyper competitive category to be in. But if you can have a product that's in an interesting niche or that you've already grown into a pretty significant brand, that's something that we're interested in.
Cool. So we're reaching the top of the hour, so we'll try to see what else we could cram in. I love Brendan's question because obviously that's related to what we do. First Choice Shipping, we help sellers expand their businesses internationally. So Brendan's asking, how much does operating 2 or 3 international stores in addition to the US add to the exit multiple on average? What would you say?
Yeah, I don't necessarily have an exact number because I think what it does, it has to depend on the revenue in which you're generating from those stores, right?
Right.
All it's going to be is looking further down at that revenue number. If you are already doing significant volumes in, say, Canada, UK, that's a really nice upside for us to say, we can continue to sell there and grow this into a global brand. It will obviously not hurt the business if you're already selling internationally. I don't know necessarily how much it would increase, say, 0.5x or 1x. But what it would do is add to that bottom line revenue number, which is something that we would continue to look at.
Right. Okay, so I think we're gonna wrap things up, TJ. If anybody has any questions, TJ is always available to answer any of your questions. TJ, you want to just, yeah, there we go. Before I could even get a chance, you guys could go ahead and reach out to TJ. Here's his email or the link to get in touch with him with all your information. And yeah, this has been really enlightening. I learned a lot. It's really interesting, I gotta tell you. So it's pretty cool what you guys are doing. And yeah, I hope to have you on soon again. And thank you everybody for joining us. And we'll be sending out the recording probably by tomorrow or early next week. So thanks again for joining us. And until next time, take care, everybody.
Thank you, Pearl. Thanks, everyone.
Bye.